With the stock market crashing down, you might ask the question, should I sell everything now and buy back later, or should I buy more now that the stocks are cheaper? Or maybe I should invest my entire life savings in Bitcoin then? In this video I will provide a nuanced and detailed look on the subject, on what to do in what situation, and especially on what not to do. First, we need to understand why we have the natural response to sell in the first place whenever the market goes down. The answer to this question is fairly simple. Our natural instinct whenever we find ourselves in a situation that is uncomfortable or potentially dangerous is to fight or flight. And seeing your portfolio drop a lot in value is something your mind thinks is dangerous, because in a certain way it is. You are technically losing money that you need for your survival. So don't fret, that stomach-turning feeling is perfectly normal. First, a common belief is to time the market and sell your shares, and afterwards, when the market has settled, to buy them back again at a lower price. While this is a possible scenario, it is highly unlikely for the average investor and even for most fund managers. In reality, studies have shown that only about 1 in 20 actively managed funds actually were able to beat an index fund over a long period. If they can do it consistently as professionals, save yourself the trouble of trying to time the market as a private investor. For all we know, this whole corona business flies over the next couple months and you miss out on huge potential gains. But what if the stock market drops further, you might ask? Then the answer is simple. Why are you that invested? Do you need that money anytime soon, as in sooner than 3 to 5 years at least? If so, then it is best not to invest that money at all or to sell and keep the rest in a savings account for the time being. The market might drop further, as seen in the crisis of 2008, and take a few years or longer to recover. So you do need to be able to miss that money for the time being. While it can be fun to look at your stock portfolio every day and see it go up, the reverse can be said when it goes down, and you might feel the urge to sell. If you are struggling with this feeling of selling when your portfolio goes down, put your portfolio out of immediate reach. This day and age, it has become easier and easier to buy and sell stocks, bonds and the like with a simple banking or investment app on your smartphone. Delete those apps and check your portfolio maximum once a month on a computer or tablet, just to make it harder for yourself to sell your portfolio in a panic. Personally, I only see 3 reasons when you should sell an investment. First, you really need the money. In theory, it is best to have an emergency fund for this, which in and of itself is a topic for an entire other video. But if the costs are suddenly much higher than this emergency fund or buffer, it is a valid reason to sell some of your investments to pay for this cost. And I do mean emergency, and not I really want a better TV. Second, you want to diversify your assets. Even though it is probably more profitable for me to invest in index funds, I personally love to invest in individual stocks just because I like the idea of sponsoring a certain company. However, my strategy is as follows. I invest 90% of my portfolio in companies that offer a dividend. Or more specifically, this is a dividend growth strategy, also a topic for another video. The rest of my investments are usually more risky investments that don't offer dividends. Attaining a diversified portfolio with this strategy when you do not have a huge pile of money isn't easy. But one of the guidelines I use is to sell half of an investment when it has doubled in value over time, and invest that money into something else. For example, a stock I bought at 30 euros is now worth 60. I sell half and reinvest it into a new company. Basically, I have now received a free stock worth about as much as I invested in the first place in the other stock, and my portfolio now is even more diversified. Third, when something happens to the company or fund you invested in and you don't agree with the decision made, this is also a valid reason to sell the investment you made. I will provide some more context with an example. Let's say a company you invested in decides to cut down half a rainforest for a new oil well they want to drill. Even though this might prove profitable to invest in this company in the long run, if you don't agree at all with this decision, then is it worth investing in this company? This might be an oversimplification, but the basic idea of stocks and bonds is to invest in something that is worth it to you, that you know will do well in the future and that the investment strokes with your ideals. Another less drastic example might be that a new CEO takes over the company and you do not agree at all with the direction he is taking the company. The short answer: nobody knows when the time is right to invest, aka time the market. The long answer: the stock market recently peaked at all-time highs and suddenly dropped a lot in value. So you are perfectly right to think that you should wait more until the market corrects. But then you might miss out on huge gains if it suddenly recovers. Again, don't try to time the market. If you have money available and are on the fence about investing into the stock market, just invest small amounts each month or quarterly, whatever you feel comfortable with. Just make sure to look for a broker that has a low trading fee so your costs don't mount up too much. This is a strategy called dollar cost averaging and also a topic for another video, so hit the subscribe button. To conclude this video, no one can tell you for certain what the market will or won't do. It is up to you to make your decision. But if I may give my 2 cents, don't sell unless you really need the money the next few years, and don't fret or sleep bad over a magic number that goes up or down. Thank you for watching this video. I would love it if you leave a like, comment and subscribe for future content. I intend on releasing more videos on personal finance and personal development in the future, especially with the more niche and European approach to finances. So if you would like to see this in the future, please click the subscribe button.